management letter. Now, if there was something where we found errors and they were to the magnitude that we had to introduce dozens of journal entries to correct all those, that's going to most likely be a financial statement finding, being that you didn't properly record revenues during the year or expenditures during the year, whatever the classification of these errors is.
So, and I know you haven't really started the audit, but what would be that materiality limit? So if you did find an error in recording revenue, if it's $50,000, is it immaterial? If it's $1 million, obviously I would hope it's material. Where?
Yeah, it would depend on what we would call reporting units. And we're getting a little bit technical here now, but we're looking at governmental activities. That includes all the funds bundled together, plus long-term debt and capital assets and whatnot. So that's one reporting unit. And then we say, and your major funds. So major funds would include the general fund, which is your education fund and your operation and maintenance, and then any other funds that meet the category of major. Let's just say transportation. I'm just throwing that out there. We don't have the numbers yet to know what the major funds are going to be this year, but if a fund qualifies as major, we will do a materiality calculation, and let's just say the amount is $40,000. Okay, so if it's $40,000 and it's a transportation fund, we're going to look at every transaction greater than $40,000 that the transportation fund had during the year and make sure that all of those transactions had some support to them.
Okay. And if you find some that don't, you find a $40,000 one that doesn't have support, it was made in error, it was made for whatever reason.
Well, if we could determine that it was an error, not a systemic error, but just let's say a transposition error or something, whatever it might be, then it might just result in a journal entry. And if that's the only one we found, we may or may not put that in the management letter. But if it's a systemic problem, we're definitely going to be reporting that, and it might even be a material weakness. Again,
so it's not the amount, it's the circumstances around it.
Right.
Okay.
But anything that is, if it's a material, if we find a material error, we're going to suggest that a correction be made to correct that error.
Okay. Good. Any other questions?
Who does the audit on the floor? And
We're not taking questions from the audience. I appreciate your enthusiasm, John. Thank you. I appreciate it.
Actually, I mean, how many people are going to be here? What are you seniors, managers? How long is the audit going to expect it to take? I mean, I think that is a valid question.
Yeah, I'm going to be here. I've got an audit manager, and we've got 2 staff auditors. We're going to be here for a full week, and then we're going to see where things are. We're not going to be done in a week, but we're going to see what we have and what we don't have at that point, and then we're going to schedule a time to come back and finish. It may take another week. I don't know how long it's going to take for sure. But that's our plan for now, is to come in, get as much done as we can in 1 week, and see where we are. Being the first year, we've already been out doing some preliminary work. That was a few weeks back, and this field work is going to last as long as it needs to get it done. We fully plan on issuing your reports to the State Board of Education by the deadline of October 15th. That's our goal. The only thing that's going to stop us would be the inability of the district to provide us with the information we need.
Yeah. And there's a question for Kelly. I mean, with the staffing, I know you're brand new, and the staffing changes that have happened. Are you able to prepare the PPCs and get everything ready?
Absolutely, I'm very familiar with all of that. To give you a little bit of background, I started at District 230 on June 1st, 2010, so right at the end of their fiscal year, and their auditor, and Werner Rogers was our auditors at District 230, and they came in the middle of July, so less than 6 weeks of me being there, and I was the sole contact person for getting everything that they needed to get for that audit. So, I'm going to have to rely on my bookkeepers to pull some things from Realco, because I'm not as familiar with that system. But I have confidence that they'll be able to get what we need to get, and I'll be able to work with the auditors to get them what they need and answer their questions.
Great. Very good.
All right. Thank you very much. I appreciate your time. Moving on to the tentative budget review. Dr. Tingley.
Okay, this evening, I'm prepared to present an overview of the budget. Not going to be in a detailed form, but we're going to hit some of the highlights, as this is something we're going to continue to work through as we move through the next month. A couple of highlights on the revenue side. Assumptions used in the tentative budget included new construction of $40 million, CPI of 0.7%. We've the last 2 years been around that $50 million mark, so the $40 million is conservative. If we find out the new construction numbers from Will County the first week of September, which we sometimes do, we'll be able to plug that number in there. Also, the district adjusted our levies to meet expenditure needs of each of the funds. State aid, ISB has not officially released the general state aid amount. The tentative budget is using the assumption of $5.2 million that is listed on ISB's website. Expenditures, the budget includes minimal discretionary spending. Budget amounts include additional technology and building equipment repairs, $750,000 for technology in the Ed Fund, $100,000 in equipment for O&M. The technology, we've put together a plan. We're going to bring it back to the board. It will need some more review and some vetting as we move throughout the year, but we have that in there if the board would want to move in that direction. If not, obviously, that would just fall down and add to the surplus. Same with the $100,000 for O&M. Contingency accounts were used in the fiscal year 17 budget, 200 Ed, 50,000 in O&M, and then transportation, 175. If we look at the Ed Fund, Steve had put together these charts for us. It's got a report of the fiscal year 16 budget, percent of total revenue, actual, percent of budget realized, and then the change from the actual to our budgeted number. First highlight in the Ed Fund, $1.2 million of general state aid has been moved from O&M in order to start generating surpluses in the fund to pay back the $6 million loan from education. Large increases in purchase services due to expected legal fees, along with the movement of the attorney's fees, moving it out of tort and into the education fund. We anticipate a surplus in this fund. Tentative budget for O&M, once again, $1.2 million included in O&M this year, so that once again we'll be able to pay back the Ed Fund for the $6 million loan. Also in here, additional revenue sources, as you can see, actual of 2016 would be some of the E-rate documents and some of the funds that we are putting into the O&M budget. Once again, we anticipate running a surplus in the O&M fund, but we'll continue to review and work through this here over the next month. Transportation fund, the $1.3 million for state aid is a conservative number. Until our fund, or until our claim is finalized, it's due on August 15th. We'll have that completed, turn that in. We'll adjust some of these numbers once that claim is completed. Purchase services, budget is less. We made one lease payment in June. Also, we will see an increase in our insurance payments this year as a result of negotiated rates, which is something Steve had done for us. Supplies consist mainly of fuel, and they're conservatively budgeted. We could see an increase in fuel prices in the current year, so we've adjusted, if there is, some of those increases, and that would be the transportation fund. The IMRF, Social Security and Medicare, there's a decrease in revenue due to adjustments in the levy. We've been running a surplus in that fund. We moved some of that in the levy. The reduction in staff is offset by an increase in the employer rate of IMRF. Greater savings in certified staff and non-certified. We only pay Medicare of 1.45 is saved from the certified staff side. So that's the overview of the IMRF. Tort fund. We've got a decrease in tax revenue, once again to an adjustment to align with our expenditures. Tort, now purchase services includes our unemployment costs and our workers' comp. Once again, we're moving our attorney's fees into the ed fund. Working cash, just a balance, it'll have a budget of $179,000. That's loans or to abolish. Really would be no movement there. Total operating budget made up of our ed fund, O&M, transportation, IMRF, tort, and working cash. As you can see, we anticipate a surplus at this time of $2.2 million. Also included in your packet is a comparison from other similar high school districts using Forecast 5 as a benchmarking tool. That's something this group had asked for, how do we compare? And so those comparisons were included in terms of tax rate, in terms of expense divided by number of students, EAV per student, those types of things. So there's some information in there, which is something we'll come back to in future meetings. And then the last is our debt service fund. The debt service fund is included in the levy. We run a slight surplus. That's just due to the timing of the payment of our long-term debt and our debt service. Capital projects. The initial funding has been budgeted for summer of 2017 projects. This would be seed money, startup money of $500,000. We have just over $5 million in the capital projects budget. Also included in your packet of backup materials is kind of a conceptual, long-term capital projects list. We've got a couple years out that look at roof replacement, looks at asphalt, looks at some of the capital expenditures that our district will have to pay for over the next several years. But once we complete the life safety survey, which will be completed this first semester, those capital projects will be brought back to this group, I believe, after a discussion with the board, and we'll start to finalize a plan on some of the maintenance that's been deferred over the last several years. And
Which roofs need to be replaced?
That's the overview. Go ahead.
So just a question, we're moving 1.2 million general state aid into the operation and maintenance fund to pay down that $6 million loan. And, my understanding is that's just going to be a transfer back that has to be approved, right, by the board from operation and maintenance to the ed fund, paying back the loan. Why are we not, at least making $2 million or making more, like $4 million into the operations fund and then just transferring it back as the loan payoff at this time?
You mean to get it all over at once, or to increase?
It's just really a transfer. It's just a transfer from one fund to the other as the loan payoff. And, coming up at 1.2 million, you're just putting it more and more has to be taken out in a later year. You're not running a full, you're not, let's say it has to be paid in 3 years. You need at least $2 million to transfer each year, or in later years you're going to have to transfer more.
So you're saying if we put $2 million more, then you go 222?
I'm asking the question because, I don't see any harm in having as much as we can now, because it's just a transfer. Unless I'm missing something, it's just a transfer back from the operating fund to the ed fund. And why wouldn't we try and get that interfund loan paid off?
So you're saying
sooner rather than later?
Put more of the general state aid towards...
Yeah, I'm asking the question, is there any reason not to
Rich,
do that?
any thought of why we might, rather than just the 1,200 at a time? I know this was something that Steve had worked on.
Yeah, I understand what you're saying right now, but I think the intent is to try and maintain the integrity of the education fund too, so that there is a balance there. It's all the same pool of money, is what you're saying, so all you're doing is going from here to there
Right.
over a period of time, and I think, you know, what we're attempting to do at this time is to get all of the ed fund accounts organized and, you know, properly accounted for. There's a few things that we need to move around in that, and the same thing in the O&M fund. And it's not going to change anything by doing 1.2 or $2 million. I understand what you're saying. I don't know if, you know, it won't change the fund balance in total between those two funds. It's going to stay the same. So
Yeah, I mean,
it is,
that's
it is
kind of
a-
my point, is
it is a
why not get
manipulation
the-
of how do you move the money, or how do you want to move the money. I think we just felt at this time that the 1.2, it's making a strong effort to show that replacement of the funds back into the education fund that were brought in over that period of time. And also trying to keep the O&M fund, you know, funded at a level so that it is starting to show a balance of a budget also. I think that's really the only reason.
If we would have, the way the budget currently is, if we would transfer more than the 1.2 million, we'd start running a deficit spending in the current year out of the ed fund. So I think that we were trying to keep, Steve's intent probably was trying to keep each fund in itself at a surplus.
Right, because
So the
then
payment of the loan is not above above the operating line, is what you're trying to say. From when you're calculating if it's running a deficit or not.
And when you're putting the budgets together and submitting them in, you don't want to show a deficit in the fund. You want to stay away from that.
So to get straight, you're taking it from the education fund and putting it into the operations and maintenance fund, correct? You're taking GSA and state aid from the educational fund, put into the operation fund.
GSA is typically, in this budget, has been allocated to the ed fund.
Correct.
But GSA is allowed to be put into any fund in order to cover.
And so you're just taking 1.2 million of
Right.
that,
It'll
put it
go
into the operation.
directly into the O&M budget. There really won't be a transfer from
Right.
the ed fund to the
Correct.
O&M. It goes directly into the O&M fund, and then at a later date, you make that transfer back. That's how that works.
And we're doing this just to get more money to operational maintenance fund to repay that $6 million.
Yes, we need to build up that fund balance so that it can basically sustain that 6 million when we have to transfer it back.
And was
The $6 million loan is from the ed fund.
It was AEP that caused the deficit in operations entry, correct? AEP that caused
Right.
the deficit in the operations and maintenance fund to start with.
So on the other sources where you have the $5 million, I don't know if you can touch on that one, for the potential land sales.
Yes.
If that, and I know that's not included in the operating numbers, but if that land is not sold, what are we going to have to file an amended budget if we put the $5 million?
It seems premature, doesn't it?
Pardon?
It seems premature to put that
Well, that's
in.
why I'm-
It's below the,
It's below,
it's below the line.
it's
below the line.
Yeah.
It's below the line.
I would want to show, it does show our cash balance going up by $5 million at the bottom. I mean, why would we want to advertise that when it's probably a remote chance that we're actually going to sell that land in fiscal 16, or 17, rather, sorry.
Yeah. My understanding, my discussions with Steve, it's below the line, and so to have it in there, in the case that we do, it's budgeted for, but it's something that we could remove before the final draft, and that's something the board can discuss as well.
Okay, and I understand it's not non-operating, but it's still, you look at the cash balance at the end of the budget, and you got $5 million more that we probably won't really have.
May not.
And then just on the contingency accounts, I know I've heard about these. I think I understand the use, but I think we have to set up the oversight of those and what the reporting and monitoring of those amounts will be. And then I guess the other thing is, I was trying to figure out where, sorry, I'm getting a little specific, where the driver's ed fees refund is. Is that going to be taken out of this contingency, or is that
No,
accounted for?
so that's accounted for in a expenditure account in the ed fund. It's, I think it's a 2,300 object we set up an account for, and a 2,300 function, 6,000 object code. So it is, it should be in that last line item on the ed fund dues, fees, tuition, contingency.
Yes, we're part of that, a reduction from the revenue side.
Right, because it flowed through in the same year.
So it just came off the
Last-
revenue, so it really wasn't pinpointed where now it's being directed there, and the revenues are totally separate from any expenses, put it that way.
Any other questions about, I know we've all had quite a bit to even start going through, and I know there's a lot more coming for the budget as we take our deep dives into it. I know you had a basic question about the...
I have a couple different questions. Benefits, for one, in the narrative, second page, says that there's no rate increase for medical insurance. Last year's change to self-insurance through Blue Cross Blue Shield saved the district over $1 million. I'd like to dig into that a little bit. What the change was and where the savings is coming from. I know when I look at the reports, I only see about a $400,000 decrease in benefits for all funds for fiscal year 16 actual to the fiscal year 17 budget. So, one, I'd like to understand savings, the change. I mean, did we change people's deductibles, co-pays, benefits? As much as I could find out about benefits areas.
Yeah,
What do I enter?
the move to Blue Cross Blue Shield was we got better in-network